Hi, I'm Craig Cameron, Portfolio Manager of the Templeton Global Climate Change Strategy. During the first few months of 2024, the theme of climate change continued to see significant volatility, lagging behind a strong market that saw momentum and growth companies outperform. The year started with a particularly difficult January and February as market expectations for interest rate cuts faded significantly and weighed on earnings outlooks. This was offset partially by a strong March and April. Sustained interest rate headwinds have driven negative revisions in near-term forecasts, and renewable energy investment and valuations have followed. We think many more short-term investors are avoiding companies in this theme due to the current uncertainty. This has also been compounded by further declines in expected electric vehicle demand growth. While interest rates do have a stronger impact on companies that are exposed to this climate change theme due to that naturally higher capital intensity, we do think that short-term valuations have become notably depressed relative to the medium-term outlook, and even if current interest rates persist. Recent market performance of companies in the climate space has been mostly disappointing, but we remain interested and excited about the long-term opportunity and believe that the current environment allows us to invest in some of the most exciting longer-term ideas. For the rest of the year, we see a number of key trends to watch. Firstly, inventory normalization. Many sectors snapped back from the COVID trough, overbuilding through 2022 and 2023, leading to recent oversupply issues. Now, whether we look at solar inverters or EV batteries, or even raw materials like lithium salts, we expect supply-demand dynamics to improve as we progress through the year. In some cases, we think progress on these issues will be more important for sentiment than either volume growth or the macro environment. Secondly, the interest rate trajectory. With market expectations for rate cuts fading considerably in 2024 thus far, the climate theme has understandably suffered. For our strategies, this has impacted the valuation that both investors and customers are willing to place on long-duration capital projects, rather than specific issues surrounding debt levels or a lack of profitability. Regardless, we still view current rates as near the high end of the range and are more likely to fall than rise over the next few quarters. This should provide some economic stimulus, improving the economics of climate investments and increasing the availability of long-term capital to invest in the climate theme. Finally, valuation. We believe that given recent volatility in this space, valuation is more important in this theme than ever before. Buying things at the right price has been just as important as buying the right companies. Given the recent outperformance of the momentum style, we now see significant valuation dispersions in the market, and we continue to be particularly careful about valuation in our strategies. As we think about risks for the remainder of the year, geopolitical issues of course come to mind, alongside the US political cycle and potential changes to the US Inflation Reduction Act. We continue to work on potential impacts of changes in US policy, but we think areas of solar and wind are less vulnerable than more speculative elements of the IRA due to the large impact on jobs growth and the economy that these sectors are having. In summary, while we can't rule out additional volatility in the months ahead as near-term economic and political cross-currents impact the theme, we still believe that decarbonization and deglobalization are defining the years ahead, with a greater urgency to decarbonize coming into focus as we cross the 1.5 degrees warming threshold. We believe the market's negative near-term view of climate investments allows us to invest in these exciting long-term opportunities globally. Our strategy now has been running for more than 6 years, and our conviction remains as high as ever of the potential long-term rewards for investing today in undervalued companies, driving positive impact on climate change.
投资一定有风险，基金投资有赚有赔，申购前应详阅公开说明书。